delivered by Renata Pedrini. So Renata, could you please share your screen while I will introduce yourself? So Renata is a first-year PhD student in the electrical engineering program at Federal University of Santa Catarina in Brazil, working under the supervision of Erlon Finardi. Her thesis focuses on improving the medium-term planning model of the Brazilian electricity system, collaborating in the project Spartacus II, stochastic model of weekly policies for the hydro dispatch of the Brazilian interconnector system. In 2019, Renata obtained her master degree in power system, again from Santa Catarina. She is interested in the areas of energy applications, going from markets, renewables, power system operation and planning, but also risk measurements and analysis in electricity markets and operation, with specific focus on stochastic programming. So, Renata, the floor is yours.
Thank you. So the title of my presentation is Hedging Power Market Risk by Investing in Self-Production from Complementing Renewable Sources. So this is a joint work with Professor Erlon Finardi from Federal University of Santa Catarina and Dorel Soares Ramos from the Polytechnic School, University of São Paulo. So the outline of my presentation starts with an introduction. After, I will present the method used, a case study, and finally the conclusion. The attractiveness of renewable energy is growing due to the decrease in price and popular appeal. Consequently, companies are driving investments towards renewable sources. One option is to invest in renewable self-production power plants. However, uncertainties related to the seasonal profile of the wind and solar generation can lead to a high level of exposure to spot market prices. Thereby, the self-producer can explore the complementarities between renewable sources to reduce the risks related to the intermittent generation profile. Considering this, the main contributions of this paper are the development of a decision support model for consumers wishing to invest in renewable plants, and the evaluation of the use of complementarity between sources as a risk mitigation strategy. Due to the great potential of hydroelectric generation in Brazil and the increased attractiveness of wind generation, this paper will focus on hydro-wind complementarity. So first, to assess the complementarity between hydro and wind plants from different regions of Brazil, we create a correlation matrix with the historical wind generation profile from 12 sites and the hydro generation profile of the submarkets in Brazil. So in Brazil, we have 4 submarkets that are north, northeast, south, and southeast. And the ones that have the great wind generation potential are the northeast and the south. So we picked 9 power plants from the northeast and 3 power plants from the south. Based on that, we created a correlation matrix, and the red color represents a strong complementarity, while blue color indicates a similar generation profile. So here you can see that the power plants from the northeast, have a strong complementarity with the hydro generation profile from the northeast, southeast, and north submarkets. And the south wind power plants don't have strong complementarity with the submarkets. So this correlation creates a background to create an optimization model for the energy procurement of large consumers. So amongst the options, we can supply demand using bilateral purchase contracts, spot markets that we can buy and sell in the spot market, and investment in a self-production power plant. The investment cost is obtained based on the disbursement schedule and the unitary cost per each source. The total investment is calculated as a sum over all renewable plant investments, and this value will be later used as a budget constraint in the optimization model. The annual equivalent cost represents the investment cost during the life cycle of an asset, and it's a function of the interest rate, the life cycle of the asset, and the total investment cost for the source. Using this expression, the payments are uniform during the life cycle of the plant in the format of installments of the AEC. This strategy enables one to truncate the analysis in a period shorter than the life cycle of the power plants, implicitly considering the residual value for the rest of the period. The decisions of bilateral contracts and investments in renewable plants are dependent, as the amount of energy contracted each time and the power capacity in each interval will be available over time in the future. This characterizes a multistage stochastic programming problem. In these problems, the computational complexity grows exponentially with the increase in the number of stages. We assessed the decisions of the consumer considering a 5-year time interval, and based on this, we proposed the scenario tree, which branches in the beginning of each year. The tree has 3 annually openings and totaling 81 scenarios. The model uncertainties are the spot prices, the bilateral contract prices, the wind generation, and the hydro generation. To properly evaluate the effects of the complementarity between hydro and wind sources, it is necessary to generate correlated scenarios. One way to do that is to use historical data. So using historical sequences from 1932 to 2017 into the medium-term model planning of Brazil, New Wave, were created 81 scenarios of marginal costs, which are after converted into spot prices. Each spot price scenario has a respective wind and hydro generation scenarios, which are in per unit, using as a base the installed capacity of 1 megawatt. And they only represent the generation profile, so they need to be after multiplied by the installed capacity of each power plant. There are no bilateral contract prices before 2013, so an autoregressive model using spot prices as exogenous variables is used to generate the scenarios of bilateral contract prices. We use contracts with 1 and 3 years duration. So describing the optimization model, the objective function seeks to minimize cost and risk weighted by a risk-averse parameter. The cost is composed by the bilateral contracts, the AEC related to the wind source, the AEC related to the hydro source, and the spot market. The power balances, so we need to consider a time to build a power plant. So before this time is achieved, we supply demand with bilateral contracts or the spot market. And after, we can consider the wind or hydro installed capacity. Also, we have a threshold for the investment. And another constraint is the cumulated amount of contracts. So if I sign a contract today, this contract will be available until the end of its period. The cumulative installed capacity, so if I install some capacity, this capacity will be available until the end of the life cycle of the power plant. A silver constraint, variable limits, and the non-anticipativity constraint that bounds the decisions that share the same node in the scenario tree. So now I will explain the case studies. We consider a consumer with 100 megawatt average of demand. And here you can see the investment information like the life cycle of the power plants and the disbursement schedule. So first, the effects of complementarity are tested when the consumer is risk averse. Therefore, the parameter ρ assumes value 1, and the goal is to minimize the risk. The confidence level for the CVAR is 95%. We used one wind power plant that has a strong complementarity, that is the power plant from the northeast, and one power plant that has weak complementarity, that's from the south. And the hydropower plant is from the northeast. So the plants are tested individually and in pairs of hydro and wind plants. Assessing both power plants with weak complementarity and strong complementarity, we observe a decrease in 11% of cost and risk, considering the 2 power plants with strong complementarity. Also assessing only the wind power plant installed in the northeast and both power plants, we observe a decrease in risk of 2%. And again, analyzing only the hydropower plant installed or the wind and hydropower plant in the northeast, we observe a decreasing risk of 13%. Exploring the balance between cost minimization and risk aversion, we compare the decisions of the optimization model considering two cases. The case one that has the two power plants with strong complementarity, and case two that has the two power plants with weak complementarity. In the first case, when the level of risk aversion decreases, the hydro installed capacity also decreases. The cost decreases by 13% and the CVAR increases by 14% from the risk averse to the risk neutral perspective. In the second case, the model chooses not to invest in the self-production wind plant. Comparing the risk averse and the risk neutral perspective, the cost decreases by 22% and the CVAR increases by 18%. Now comparing both cases in the same plot, even in the risk and cost related to each case, even in the risk neutral case, is more beneficial to the consumer to have the power plant with a more complementarity profile, which has a cost 3% lower. Also, in the risk averse perspective, the CVAR is 11% lower for case one. In each risk aversion profile, the model chooses to supply demand in different ways. When the consumer is more risk averse, the supply decisions involve more participation of bilateral contracts and self-generation, which reduces the exposition to the volatility of the spot prices. The model also considers the consumer's option to decide the best time to invest. One problem is because I can increase the capacity over time, and this can be difficult in practice. So to conclude, the level of risk decreases when the complementarity between the power sources is explored. Also, the complementarity is higher if both power plants are installed in the Brazilian Northeast submarket. As future works, the analysis can be expanded to incorporate a large scenario set considering the complementarity using synthetical time series and cluster methodology. Also, we can increase the scalability of the model using scenario reduction or decomposition techniques. So thank you, and as acknowledgements, I would like to thank you, the National Council for Scientific and Technological Development, Norte Energia, and Project Spartacus II.
Okay, thanks a lot, Renata, for your interesting presentation. I see we have already one question from Professor João Pecas Lopes. So, like from sister country to the other sister country, you know, Brazil and Portugal, both with nice hydropower. So, are you considering also investments in reversible hydropower plants, or is just the management of the run-of-the-river hydro plants portfolio?
So we only consider our installed capacity of the power plant. So it's kind of, it was a run-of-the-river hydropower plant.
Okay.
Okay.
Some anonymous, have you considered component uncertainty? How does it affect the computational complexity?
I don't know what is component uncertainty. I don't know if it can be.
What could be uncertain in your mathematical model? For instance,
okay. So yeah, so the uncertainties are the prices. So if the bilateral contract prices, the spot market prices, the wind generation, and the hydro generation. As we have considered small scenario set, because we only have 81 scenarios, we have this does not affect the computational complexity. So we can solve the model by a deterministic equivalent. But this model can be expanded to incorporate some decomposition techniques in order to incorporate more a larger scenario set.
Okay, thanks. But actually in your model, you do not care so much about computational complexity. So basically, you are focusing on the value of decision making for stakeholders, right?
Yes, yes.
So,
The problem is because we have to consider correlated scenarios, because in order to evaluate the complementarity between the sources. So we cannot create a large scenario set if we don't use advanced techniques like cluster methodology and so on.
okay. Good. Is there anyone wishing to ask a very last question? So I don't see anything on the chat. In this case, I would like to thank you again for your interesting presentation and response to the questions. I would also like to thank all the speakers of the session who delivered interesting presentation. Again, different perspective from different angles to the problem of integrating massive amounts of renewable energy in the power systems. Very interesting presentation. Thanks you all. I would like to thank people who attended, to participant, and especially those who were really very active and fostering interesting discussions and challenging the speakers. And last but not least, I would like to thank the person in charge of the hosting and the technical support of the session. I think it was a session who ran very well so far. It's just unfortunate that we cannot meet live and have different activities afterwards and continue these nice discussions other than by email. So thank you all, and with this I am closing the session. Bye. Hope to see you soon all.